Another economic outlook here, this time from CardinalStone. And of course, if we take a look at the reports, from pressure to plateau, Nigeria's 2025 economic outlook. Now, you can see the vehicles moving there. We're going to get to that in a moment. But before we do, Olaolu Boboye, he's the head of macroeconomic research at CardinalStone. He joins us now. Good morning to you. Thank you so much.
Yeah, good morning.
And Happy New Year.
Same to you, and thank you for having me.
Yeah, good to see you.
Yeah.
So, I was really inspired by this front cover. Well, what is the, if we should put up the original cover before we get to the AI stuff. But what inspired, explain the cover. What does the cover mean? What with the road and the mountain and all that, what is that?
Exactly. So it has been a troublous time for Nigeria.
Yeah.
For businesses, for individuals over the last 2 years. Even way beyond then, we think that we are gradually moving to a place where those problems are literally behind us.
Right.
The worst is behind us. We are going to a place of stability and then moving closer to where we start yielding the reward of the effort of the government from the reform side, be it from the fiscal authority or the monetary authority.
I think you guys should go into film, because I thought of so many movies when I saw this. So the mountain is the volatility, and then the plateau is the flat.
Exactly. Yeah.
Okay, so let me ask, and I'm sorry to derail this conversation, but maybe we'll add extra time. So we decided to use an artificial intelligence tool to animate the cars, right? And can you talk about just from your end, how you guys at CardinalStone are looking at and I know this isn't perfect because you can see one bus moving from one lane into the other and running over other cars, but AI and productivity, how do you see it impacting output?
We think it's the future for all businesses, including ours.
Yeah.
So in research, we are constantly innovating, and even the entire CardinalStone team, we're constantly innovating, adopting the latest technology, adopting AI, just to improve our output, improve our productivity, and improve the values that we create for clients. So clearly, it's something that we are big on, right? And it's something we'll continue to do.
Please keep up the creative covers for your report. I really like them. You guys, anytime you bring a report, there's always a nice theme, and it screams Hollywood on Hollywood. So let's get back to the economics of the matter now. I love the fact, and let's put this up from the reports, Nigeria's economic paradox, low unemployment, high poverty. There's a number of charts we took from the report. Talk about this here, because this whole rejigging of the way unemployment is calculated, where we're at 5% now versus where poverty is. So talk to us about this paradox here.
Okay, so first, you know that Nigeria currently has one of the lowest unemployment numbers in Africa and even globally, right? But then, just like you've pointed out, there's a paradox of where we have high poverty rate, where we have low standard of living. So it was a concern for us. So we had to do a digging. And the starting point for us was to understand the employment distribution in Nigeria. We discovered that more than 85% of employment in Nigeria is skewed towards self-employment, right? Over 90% of that employment is skewed towards the informal sector, right? That has given us a clue. We checked what the informal sector is doing. We discovered three major things. Number one, three major things that makes us feel like the productivity that we're getting from there is not enough to drive adequate growth, to drive productivity and value. Number one, we discovered that for every value created in the informal sector, in the formal sector, the informal guys are only able to create 14% of that.
Wow.
Not just in Nigeria, but also in Africa. Secondly, we discovered that more than 75% of those guys in the informal sector don't have higher education. Now, the consequences of that is you see them, they are not able to exhibit the kind of educational powers that you see from the informal guys. And then the last is we saw earnings disparity in terms of revenue, in terms of net profit. So for example, you see that more than 75% of the informal sector guys earn less profits after tax of less than 250,000 per month. That's worrisome compared to what you see in the informal sector. So that low revenue, that low profitability constrains ability to grow the business, ability to expand, and ability to create value. So these are some of the things that we discovered.
Great stuff. And I think as you were speaking there, we got a couple of those charts, I think on the net profit side, where under 250,000 is the 79.4%. So making under 250,000, and then as far as the monthly revenue generation, it's on the other side. So
exactly.
there's some weakness. Yeah, there it is. Perfect. So that's your net profit breakdown of the informal sector. We've got 79.4% of them making less than 250,000. I think we got another one on the monthly revenue generation that you just mentioned, where that is also, yeah, exactly, skewed to where the ones who make that amount of money. The weakness in the output there is definitely something of note. Now, I was speaking with someone who said that they don't believe that Nigeria has fallen from first place to fourth as far as gross domestic product is concerned, compared to the South Africas, Morocco's, and Algeria's, because, and you've just mentioned this informal sector now, we'll put the chart up, the bar charts of the different countries. Yeah. Perfect, there it is. So, they say that their argument is that the informal sector is not properly captured. What's your response?
Yes, absolutely, right. The last time we rebased the GDP, because rebasing of GDP is what helps us to capture the informal sector. The rebasing of the GDP was a decade ago, right? And if you look at between a decade ago and now, a lot of things have changed materially. Take, for example, in the technological space, we've seen material uprise in technology activity, be it fintech, prop tech, ed tech here in Nigeria. We've seen a few number of them hit the unicorn level. We've seen a lot of foreign interest within that space. We've seen them getting a lot of flows. This is not properly captured by the GDP. Secondly, check what has happened in the entertainment industry in the last 10 years and now. 10 years ago, there was nothing like skit making. There was nothing like making money from YouTube in Nigeria. Maybe it's not so popular. But now, you now have people who are full-time content creators in the comfort of their room, making good dollars. Now, this is not properly captured, not even captured from the economic side, not captured from the tax side, right? Which is not a total reflection or a proper reflection of Nigeria. So we think that once the GDP is rebased, you will see a more reflective economic size, because an estimate by the IMF says that the informal sector is about 60% of the current economy size that we have, right? If you have a significant portion of that being captured by economic numbers, then you see the economy growing bigger. That's part of the strategy the government intends to use to achieve the $1 trillion economy in the next few years, right? So clearly, yeah, it can be bigger, it can be better through proper capturing. All right.
And as you can see that from your chart there, Nigeria falling to fourth, maybe we jump back up if that happens. The services sector, we took the pie chart from the Bureau of Statistics showing that services is what, about 55% of the economy, ahead of agriculture and industries. Your reports, you say that there should be, you expect some stability for services in 2025. What drives that forecast?
Okay, so we are looking at growth just being slightly higher than what we had last year. Because one, it's some performing well sector, right, being masked by some struggling sector, right? So take, for example, the ICT, which has been the crux of the services sector, is likely to struggle a bit next year, right, because of low investment from telecommunication players, because they've been trying to get this tariff increase, which is difficult for them. NCC has not yet approved, right? And the excitement for them to do more investment in the country might be a bit limited. When you go to the financial services space, they've profited from elevated interest rates. Expectation is that towards the tail end of the year, right, you are likely to see interest rate moderate a bit, which means that the kind of growth that they reported last year, they might not have it. But notwithstanding, we expect the likes of transport, which benefit from trade base effect, to cover up. We expect the real estate to improve. The expectation for lower inflation, lower interest rates, bodes well for the consumers, especially from domestic consumption, which is likely to support wholesale and retail trade and cross-border activities, basically. So that should profit the trade sector. But notwithstanding, we still think that the service sector will be able to do well next year, but it will be more of a stable growth compared to what we have last year.
Fantastic. We were talking power in our last segment with Arise business analyst Chika Mbonu, with the news that the Aba Disco is raising tariffs by about 50%, and Chika Mbonu is making the case that if you're going to be charging people, at the different levels, you have to make sure the supply is, commiserate with that. Power is one of, I have to ask you about this. There's two folks I want you to listen to, two very prominent individuals, Tony Elumelu, chair of United Bank for Africa, and of course Bismarck Rewane, the managing director, renowned economist of financial derivatives company. So we had I had so much fun doing this. Our spoken word poetry, end of year report for monetary policy. I want you to take a listen to first. Let's start with Bismarck Rewane on what he said about power supply in Nigeria.
In the first quarter of 2025, I believe also that the power supply crisis in Nigeria will come to a head. Something has to happen. Something has to give about power. If we don't do anything about power supply, then the economy is going to be in dire straits.
If we don't do something about power, things are going to be in dire straits. So that's it. Second, Tony Lumilo was at the Future Investment Summit in Riyadh, Saudi Arabia. Arise News was there. We covered all the festivities. So we spoke to, I said festivities, activities. we spoke to him. Tony Lumilo has been, of course, he's in the power sector. Transcorp Power is listed on the exchange now. Listen to what he said. I mean, he kept hammering on about electricity. This is a portion of what he said while we're in Riyadh.
We are investing. We're high on Nigeria. In stock market, they will say overweight. We're overweight on Nigeria. We're going to invest in Nigeria. But we also use this opportunity to call on policymakers, those who have responsibility for making sure that critical infrastructure and policy environment is right, especially access to electricity. Right. I mean, we just need to fix it.
You're in the power sector.
No, we are, but we are constrained. Yeah. We are constrained.
Right.
If you talk to some of our friends, we just need the power sector prioritized, just the way we need to prioritize our young ones. And power will help us to industrialize Nigeria. It is industrialization that will help us create jobs for our people, that will help meet the present aspiration for economic prosperity for everyone. So those please who have responsibility for power in Nigeria, do something about it. We need massive improvement in access to electricity. We need our transmission lines fixed. We need gas provided, and we need to pay the massive debt that is owed to the power generating company. It's stifling and it's killing business.
So, I mean, look, we're at the start of the year, we're laying out all these issues. How important is this power thing?
So, absolutely, I agree with both of them. Electricity is very important in Nigeria. If you check the business confidence survey by CBN, one of the top concerns that they get from manufacturers and producers is electricity concerns, right? If you check electricity deficit in Nigeria, it's over 40%. And then we still have quite a number of places that are not metered. So I think a few things the government needs to do is, one, we need to increase metering across the rural and the urban regions. Secondly, we need to fully privatize the power sector. We need the private guys to come in there to manage it efficiently, right? Thirdly, the government needs to pay up all the debts which has accrued over the last couple of years in the power sector. So clearly, power is needed, and then we also need to explore alternative power in Nigeria. We have sun, we can go into solar, it's expensive, but we've seen quite a number of people adopt that in the last 1 to 2 years, right, because of elevated electricity prices. People are now adopting that because of energy prices also jumping. So we can adopt alternative power supply, which we think the likes of solar, we have it, sun for solar, we have it abundantly in Nigeria.
There's a firm I know somewhere in Lagos. They had to move from the top floor of a building to the first 2 floors at the bottom because the electricity supply was impacting the elevator and it was impacting people getting up to the top floor. So they had to move down. Now, that's here in Lagos. Lagos is already moving very fast in terms of tender offers and getting investors. But that's Lagos, the commercial capital. What about the other states? Do you have confidence in the other states, again, on this power issue, being able to attract the necessary investment needed to power the country?
So one thing about attracting investors is this. Investment will always go to where there is excitement, where they are comfortable with. If the enabling environment is created either by the state governments of those states or the federal government for the entire federation, foreign investors will be excited, right? If you put policy consistencies. Take, for example, we've had issues in the past where there are policy reversals and policy inconsistencies. And you see some guys who came in, who brought in flows, change of government, just automatically change everything across the agreement. Right? If you have consistency in terms of government policy, in terms of creating a friendly environment for those investors, they will certainly come. And most importantly, where they can make money. If you're in a country where you're not making money because of maybe insecurity issue or prices not being reflective of what it should, then there will be concern. They will certainly be concerned. So yes, they can come, but the enabling environment needs to be created.
Fantastic stuff. We're out of time. Look, your report's so in there. There's so many things you didn't even get to. I encourage everybody to download this report from CardinalStone. Boboye Olaolu, the head of macroeconomic research, thank you so much for coming to talk to us. Really appreciate it.
Thank you for having me.
Appreciate your time.